So if you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here. We didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart.
I guess whichever way you look at it, this week was a pivotal week in global economics and macroeconomics. One of the biggest things to happen was the Trump tariff announcements. It's going to have long-lasting implications. And the question is, what are those long-lasting implications actually going to be? How they're going to affect the economy? How they're going to affect the markets? And I've got a very, very, very big show for you today. I've got 𝗤𝗄𝗄 with us live, and we're going to break down what happened this week. We're going to break down the tariff announcements, and we're going to break down the implications and what the markets are going to be doing in the short term and by the end of the year. And spoiler alert, 𝗤𝗄𝗄 actually still keeps his prediction that Bitcoin is going to hit $250,000 by the end of the year. Now, the big question is, how do we get from where we are today to $250,000? If that sounds good to you and you want to hear, then all you need to do is, you know what you need to do. You need to subscribe to the channel. We're nearly, we're over the 1.16 million subscribers. Subscribe to the channel, obliterate the like button, and let's get this Friday banter on the road. I mean, I genuinely think that this is going to be like an iconic meme that's going to last for years and years and years. Like, you know, when the president of the United States comes out with a poster, and literally a cardboard poster, and posts tariff announcements, which are going to have like massive worldwide global trade implications. They could take markets into recessions. It can create economic booms in other markets. And it was all done on a cardboard poster on a press conference. Today, we're going to dissect exactly what happened and how we go from the uncertainty of where we are today to where 𝗤𝗄𝗄 says we're going to be, which is a $250,000 Bitcoin by the end of the year. So it's going to be a massive, massive, massive banter. So listen, if you're new to the channel, subscribe to the channel. If you're a regular, obliterate the like button. I want to remind you, our Friday banters are brought to you by one of our best partners, which is NordVPN. I did tell you guys that there's many reasons to have a VPN. One is because you want to be surfing anonymously and you don't want to be disclosing your IP address. Also, I don't know about you, but I intend to watch the Japanese Grand Prix this weekend. And the problem is where I live, you can't get to view Grand Prix on the internet. But if you take a VPN and you set the VPN at Japan, then you can kind of watch the GP for free. So you surf anonymously, you protect your crypto, you save your IP address, and you get to watch all these, you know, restricted things that you can't do in your thing. And all you do is you need to get a VPN. The price of VPN is less than $3 a month, and you support the channel at the same time. So there's a link below. For those of you who don't know, there's a link over here. Just click on the VPN, get yourself a VPN, and protect yourself and protect your crypto. So who better to get an update with after a week like the week that we've just had than our good friend, 𝗤𝗄𝗄. 𝗤𝗄𝗄, how are you, my friend?
I'm excellent, Rand. How are you?
Good, thank you. I see you're in a new office or a new office environment, certainly one that I haven't seen before.
Yeah, gotta spruce it up.
Amazing, amazing. So listen, it's been a big week, but before we get into like the events of the week, I have to ask you a question, which I posted on Twitter the other day. It's a very simple question. Are we in a bull market or are we in a bear market?
Bull market, easy. The bear market, the depth of the bear market was what? November 2022, $15,000 Bitcoin after the FTX debacle, and we've rallied quite handsomely since then.
So what makes you so confident that we're in an upward? I mean, when you take a bear market, bull market, we're talking about an upward trending market or a downward trending market. I mean, what makes you so confident that this market's still in an uptrend?
So we went through the previous all-time high of 20,000 and the depths of the FTX crash and sort of the Fed hiking rates and other central banks at a very quick pace in 2022. And we took out 70,000, and then we went up to 110,000, and now we've still held above the previous all-time high. So I would say that we're in a bull market. Obviously, I'm talking about Bitcoin. Your shitcoin portfolio might have different results.
Yeah, tell me about it. I think everyone's seen the pain there. What would it take to invalidate your thesis that we're in a bull market? So, like, if I said to you, like, like right now, what would change your mind that we're in a bull market?
If you had the leaders of the largest economic blocs like the United States, China, Japan, EU, telling their populace they would want to run an austerity program like what Milei is running in Argentina, then I would say that we're on the cusp of a bear market, because that means that they are willing to extinguish credit and rebalance the economy smaller so that it could grow from a healthy base. But instead, what we're hearing is we want to continue to run deficits. We have some ideas how to tinker around the edges in terms of imbalances in the global economy. You know, this is what Trump and his tariffs and all that kind of stuff is about. But at the end of the day, even Trump, who people are saying is wrecking the markets and whatever, his plan is to go from a 7% deficit to a 3% deficit in 4 years. His plan is not to go from a deficit to a surplus and retire treasury debt. That's not his plan. So I don't know why people think that credit is not going to continue to flow. It will continue to flow. It's the only path forward, given the policies that the major economic blocs are pursuing.
Okay, so let's go back. Let's go. I mean, it has been Trump's week this week. I think this video will become an iconic video over time. It's the declaration of the reciprocal tariffs. Crazy to think that in a technological age, Trump pulls out a piece of cardboard with the reciprocal tariffs. But I mean, look, the tariffs are pretty significant, and Trump obviously has some kind of game plan here. What do you think that the Trump game plan is here? Because these tariffs weren't light tariffs; these were real tariffs. This was striking a big blow. What do you think the game plan is here?
Very simple, and I talked about it in my recent essay, the BBC. I posted a chart of the current account balance of the United States and the financial account. I think if you scroll down a bit, you'll find this chart prepared by Ned Davis Research. There it is, right? And so it's pretty much a mirror image. And what that means is foreigners are able to sell stuff into the US and they earn dollars, and to keep their currencies cheap so their exports can continue to grow, they don't repatriate that currency back into their own domestic currency. They take those dollars and they buy financial assets. And so they fund the US government. So they buy treasuries and they buy stocks, at a macro level. And that's basically the top line there.
So at the extreme case, let's talk about China, because I think China is one of the biggest, the biggest people here. You're saying that China sells items to the United States, gets paid in US dollars, never swaps the US dollars back into Chinese currency, but actually takes those US dollars and actually buys the treasuries, right?
Correct.
Okay. So what's the game plan?
And so Trump is basically saying the result of that is deindustrialization of the United States, hyperfinancialization, and he believes that the US can't make stuff, can't make weapons, can't make cars, can't make goods, and therefore there's not good jobs for the 65% of the US population who doesn't have a university degree, right? And so those are the people who voted for Trump. And so he says, I'm going to change this. I'm going to basically take that blue line and make it zero. But the problem is, if the foreigners don't have dollars to buy treasuries and stocks and they become marginal sellers or just don't participate, then the juice that's been pumping the US market exceptionalism over the past 20 to 30 years evaporates and the markets collapse, right? And so the question is Trump serious about doing that? Because there's a cost to this. And obviously we saw today, he is very serious. And he was very clear on the formula. They basically took that current account, the trade balance, and they divided it by the, I forgot the formula, but essentially he's trying to correct that line there, make it go positive.
They were looking at effectively at the trade deficit versus, or the trade surplus. They weren't actually looking at the reciprocal tariffs. He initially said that they were going to base it on.
They didn't look at correct. So he's trying to basically take that negative however many trillions of dollars and make it zero. And so he does that by basically saying, oh, you run a massive trade surplus, then here's a massive tariff, and either you produce a good in the US consumer, buys less of it because it's so much more expensive, and therefore the gap narrows, and we just produce more stuff internally in the United States. That's his goal. And obviously with these very high level of tariffs, he's communicating that he's been very serious about correcting this imbalance that he campaigned in 2016 on, and he campaigned in 2024 on.
Okay, now I got to ask you a question. Do you think that Trump's bluffing here, and when I say bluffing, do you think that he actually intends to keep these tariffs in for the long term, or do you think that he's using this as a negotiating tool with other countries to try and get much more favorable trade and to try and almost just skew the scales the other way? Because it feels to me like Trump's approach is always come out swinging and then negotiate afterwards, after you've given people a taste of what you're capable of. And it's obviously a position that you can only do when you're the kingpin, you're the biggest consumer in the world. How serious do you think he is about keeping these tariffs in place?
I think he's very serious about it. Otherwise, he wouldn't have come out with these levels. He could have come out with much lower levels. Maybe he could have done a 20% tariff across the board, right? That was still a worst case scenario for a lot of macro analysts in terms of what the tariff could be, but he went over and above that, and basically is signaling that I'm serious about correcting this imbalance. And of course, I'm sure that some of these tariffs will be negotiated lower if, XYZ country, commits to doing some sort of like foreign direct investment, or maybe their national champions decide to build a few factories in the US, whatever it may be, or whatever the geopolitical things that Trump and his administration wants. But at the end of the day, he campaigned on 2016 about, China ripping off the US. He campaigned in 2024 about China ripping off the US. And these tariffs are testament to the fact that he believes that he wants to rectify this imbalance.
Okay, so how does this play out from now? The tariffs go into place. In the short term, I guess the US consumer has to continue to import because it's very difficult to move the manufacturing across in such a short period of time. Does that mean that in the short term we get an inflation spike?
Possibly. But I think the thing that obviously we care about for crypto people is, what does that mean for global liquidity? Are the central banks, the Fed, Treasury, banking system, what are they going to do in response to this? And I think the big problem with this strategy is when you take away the largest marginal buyer of treasuries over the last 30 years, China, Germany, Japan, and you say, okay, here's a massive tariff because we want to rectify this massive surplus that you've been running, then they don't buy treasuries. And $36 trillion in debt continues to grow exponentially. The deficit is still not zero, and Trump's plan isn't to make it zero. So again, the interest cost is going to continue to grow exponentially. So who is going to buy all this treasury debt? And the point that I make in my essay is that the Fed is going to step up, and they've already started to step up by curtailing QT, signaling QE for treasuries. They're going to have the banking system step up. Besson has been on a tour of various financial media publications talking about rescinding or giving an exemption for the supplemental leverage ratio, which allows banks to buy U.S. treasuries with infinite leverage and thereby fund the U.S. government. And so I think these two monetary agents are going to be called upon to plug the hole because Trump is serious about rectifying that chart that we just talked about for the last 10 minutes.
Okay, but how does it align with what Jerome Powell basically, Jerome Powell's mandate? And Jerome Powell's mandate, or at least he claims, is he's completely politically independent, even though I think that goes up for discussion. I think you mentioned in your essay, you mentioned that he cut the interest rates 0.5 before, while the Democrats were in power. And that maybe shows that he's not politically completely independent. But be that as it may, his mandate, allegedly, is keep inflation down and keep employment up. That's pretty much what Powell's mandate is. You're saying that there's going to be a break away from the mandate here, and that they're going to step in to help the government?
Yes, and I think Powell is going to act just like every other Fed governor has acted in the past. For World War II, the Fed was subsumed into the Treasury, and they conducted yield curve control, where they fixed the price of bonds to allow the U.S. government to fund the build-out of the war. In the 1970s, Arthur Burns wrote a famous essay, which I quoted in the essay, The Anguish of Central Banking, where he talked about how the social programs that the U.S. government was pursuing were incompatible with squelching inflation. And as the Fed chairperson, he felt that his duty was to the federal government to do what the politicians wanted. And he did that. Paul Volcker, yes, he did raise interest rates very aggressively in the early 1980s, but even he stopped short of going, full nuclear on things when Reagan and lots of senators and Congress people were on his ass in the early 1980s because of the steep recession. And we had the Greenspan put in the 1980s and 1990s. And then we had Ben Bernanke with helicopter money. And then we had Janet Yellen with her policies of continuing QE and then doing stealth QE at the Treasury Department. And now we have Jerome Powell ending QT essentially, while unemployment's at what, 4%.
Yeah.
The stock market's at all-time highs. Maybe it's off, I don't know, 5 to 10%, but it's still all-time highs. And the U.S. economy has been growing above trend pretty much for the last, few years after COVID. So there is no need for easy monetary policy, other than the fact that the government has this exploding debt problem and they need to fund it, and therefore the Fed will do its duty and fund the government.
So how you saying this plays out is tariffs go into effect. China doesn't sell as much as they usually sell into the US, and I use China as a proxy for all other nations that don't have as many US dollars. They don't invest as much into treasury bills, but the Fed step in and the Fed become the buyer of the treasury bills. So very similar situation to what's happening in Japan, right?
Exactly. But I mean, it'll be a bit different. It might be, some tweaks around the edges with quantitative tightening. Maybe they're reducing mortgage-backed securities and then buying U.S. treasuries, or they're doing some things in the banking system with the supplemental leverage ratio exemption. Or there's a recent article published in Bloomberg about some economists saying that the Fed should backstop relative value hedge funds who are engaged in a treasury futures contract basis trade when they run into trouble if market volatility picks up, and the Fed should basically take over that position and run this trade for them instead. So again, there's various ways to do it, and they're going to try to say it's not quantitative easing because that's a bad word these days. It's not inflationary, but at the end of the day, the amount of dollars will increase to buy treasury bonds, and that will flow in its way into crypto. And I believe Bitcoin and the crypto ecosystem will do very, very well in fiat terms.
Okay, so I'm looking at two charts. The first chart that I'm looking at is the 𝗥𝗢𝗄, right? And I think the 𝗥𝗢𝗄 is painting the same picture as you said. There'll be less demand for US dollars because there will be less demand internationally for US dollars, and so the 𝗥𝗢𝗄's reflecting that. The 𝗥𝗢𝗄's come down quite sharply. It's around 102. Talk me through the 10-year Treasury bond coming down so sharply. Why is the 10-year responding like this?
Because people think, oh shit, the markets are falling. There's going to be a major recession. Therefore, the reaction is I need to go into bonds. I need to go into the safe haven. I need to go into 10-year treasuries, and that's why they're buying them. So
you think that the markets? So like when I thought of this, I thought first that the yield on the 10-year bond will actually have to go up, and the reason why the yield will go up is because there's going to be less buyers. In other words, China's not buying. You're saying the market's seeing right through that, and they're saying, look, we know China's not going to be buying, but we also think the Fed's going to be buying, and we think there's going to be a recession. Let's just get into bonds and just get the 4% stable return.
I mean, I'm not sure if it's that intelligent. It's probably just more that investors have been trained when stocks go down, buy bonds. I think we'll have to see over the medium term whether or not some of the theories that I have play out in terms of how the 10-year yield trades. I don't think a one day reaction to above average tariffs is really going to tell us which way or the other the market's going to go.
Okay, so I mean, let's talk about which way the market's going to go. How do you see the next couple of months playing out? I think initially you had a thesis that April was going to be quite a volatile but positive month. After the tariff announcements and everything else, how do you see the next couple of months playing out in risk assets? In risk assets, let's talk about NASDAQ, let's talk about Bitcoin, let's talk about all those risk markets.
So, I mean, I think there's going to be, let's focus on Bitcoin. April's going to be a tough month. We have this tariff digestion. The market still believes that Bitcoin is, a one-to-one proxy for the NASDAQ, and people are starting to sour on, US big tech. So that's coming off. And so people are like, oh, okay, well, NASDAQ goes down, therefore Bitcoin goes down. I think Bitcoin is going to perform more like gold, but it's going to take a while for the market to sort of ditch this correlation between the NASDAQ and Bitcoin. You have taxes being paid by persons in the United States coming up on April 15th. That's a liquidity negative event because people have to sell things to pay their taxes. You have the debt ceiling in the US. It's unclear whether or not the Treasury is going to refill their checking account. So they've been drawing it down. It was about $750 billion at the start of the year. Now it's about 360 odd billion. And as the government cannot issue debt on a net basis right now, the Treasury needs to draw down this account so that it can, fund the various agencies. But once that debt ceiling is resolved, and it will be resolved, then the question is, does the Treasury say, okay, I need to issue a bunch more bonds, suck liquidity out of the system, and raise my balance back up to, say, 700 or 800 billion? We don't know. We'll find out in early May when the quarterly refunding announcement comes out from the Treasury about what their target is for their cash balances. So I think, April's going to be a lot of uncertainty. There's max tariff hysteria, people freaking out. There's going to be this global recession, change in the monetary order, all those sorts of things. So I think it's going to be very choppy, a choppy to down month. Obviously, I hope the 76,500 holds. I think it will, but I think we're going to come close to testing that.
Yeah, I must say, I did read your tweet where you said, do you think 76,500 holds, that we go 76,500 and then 110 first. I do think that 76,500 is quite an important range. And the reason why I think it's such an important range is because if you look at where we were chopping in the previous administration, kind of like 74,000 was the top of the previous administration before the favorable administration. So I do think it's pretty unlikely in my mind that we'll break below the 76,500 unless we get complete economic chaos. How long do you think it takes for this whole narrative to play out and for the markets to actually start turning? Like, when do you think the markets digest all of this and actually start turning upwards? If you say April's going to be a volatile month.
I think we'll have to see what Powell says in the May meeting of the Fed. And also, China and EU have claimed that they're going to do retaliatory tariffs or do other things to counter this effect, right? So what's the easiest way to counter tariffs? Allow your currency to depreciate, right? So China is creating lots of credit internally. Fiscal expansion is about 10% of the budget right now. However, for whatever reason, Xi Jinping does not want the yuan to depreciate drastically against the dollar, and therefore the PBOC has been actively raising interest rates to defend the currency, defend the 7.3 level that is their line in the sand at the current moment. So the question is, okay, now Trump came out with, I don't know what the tariff is on China, like 30 or 40%, whatever it is. Does he say, fuck it, let's just torch the yuan, and if the yuan goes down by 20, 30%, then I've sort of just negated all this tariff impact and people continue to buy Chinese goods in the same quantity because the effective price is the same. But all that credit is now gushing forward out of China because the PBOC is no longer sterilizing it with raising interbank rates. So again, it's going to depend on what other people do. What does the ECB do? Are they going to start buying bonds or continuing to cut rates? What's going on in Japan? Pretty much a bloodbath today in the Japanese markets. The banks got crushed. There's a question of whether the BOJ is going to hold or even continue to ease when they said they're supposed to be raising rates at their next meeting. So again, it's not just the Fed. Everyone else is now going to react to what Trump has proposed in their own best interest. I obviously think in the medium term that means printed money, but we're going to have to see what these central bank and finance ministries say about what they're going to do from a monetary perspective to counter the effects of tariffs on their countries.
Okay, so with that in mind, how do you deploy money now? Do you deploy money now? Is this a good time to be deploying? Are we in relatively peak fear, or is this like a time to be holding onto your cash, putting it into maybe T-bills and then coming back into the markets at a bit of a later stage? How do you position yourself from a risk asset point of view?
So, I mean, if you're extremely risk seeking, then I think you're deploying capital in a small way, right? You're dollar cost averaging or just doing a TWAP, time weighted average price, not trying to pick a level, but saying, okay, I know that there's a lot of stress right now. I think in the medium term, the money is going to be printed. And whether it's I buy it 78,000 or 85 or 89 or whatever, in 6 months' time, I'm going to be glad that I bought during this period. Or you could say, I'm going to wait for a definitive statement from one or more central banks saying, I'm going to provide, easy money to counter this change in the global monetary order. Now, obviously, once that happens, the market's going to be much higher. However, you're going to be very confident that you've escaped sort of the bear trap, and there's not going to be, a crash below 76,500 or some other level in whatever coin or token that you're trading.
So do you still maintain what you said in this tweet that you think we could hit 250,000 by the end of 2025? The reason why I ask is it doesn't leave us with much time. Like, we're at 85 now, we've got 9 months left of the year. Like, do you still believe that 250 is realistic by the end of the year? And
absolutely. I mean, look at what happened in 2021. We went from about 5,000-6,000 to 69,000 in 3 months, right? So No, sorry. What was it in the summer? Whatever. I think we went up like 5 or 10x in a very short period of time in 2021 when that COVID stimulus really just like kicked in and went, turbo on the markets. So imagine this, that Trump and the Republicans have an election to win in 2026. And so they need to start making things look really, really good for the economy coming into the year end. And so I think that they're trying to front load the pain now, maximum pain now, so the voters don't really remember how much things sucked in April, May, June. But in December, when all of their representatives are starting to canvass and saying, hey, vote for me in 2026, now things have to look rosy. Oh, I've fixed the economy. The trade is more balanced, blah, blah, blah. All these banking regulations that Bessent is talking about removing have been removed. And so the money is going to start gushing. And obviously, you're going to have a response from the rest of the world to their populaces saying, I'm going to protect you from America. Let's print some more money and bring prosperity here.
Yeah, I mean, I must say, I do think that it's exactly what I've been saying. I've been saying Trump wants to take the pain now because then he can defer it back to the Biden administration. You can say the Biden administration left us with a huge mess. We took the knock and look, we fixed it and we're on the up. And that's why it's probably great to front load the pain right now. Let's take all the pain right now. We can push it back to Biden and then we can show the world pretty much how we fixed the whole thing. Trump has many times said he's not looking at markets. Like, do you think he cares about the markets? Because I remember Trump being quite a vanity guy. And when I say a vanity guy, like the metrics, the measurable metrics, which were the market indices, were always front and center of him claiming his success. So, I mean, do you think he is looking at the markets, or do you think that that's just he's not really looking at the markets, or is that just a media buzzline?
I mean, maybe he is, maybe he isn't, but it doesn't really matter from our perspective. What matters is what is Bessent doing? Bessent says, I want to lower the 10-year yield, right? And so if Trump's policy is to take away the largest marginal buyers of the thing that you're selling, treasury bonds, and you want the yield to go down, then you better get the Fed to buy it, or you better get the banks to buy it. And so I think they're very focused on the markets. Maybe Trump isn't specifically, but the lieutenants who are in charge of the monetary policy that we care about as crypto investors are absolutely focused on where the 10-year yield is, what's the S&P, because capital gains taxes are the marginal driver of revenue for the government. The last thing they want is the deficit to increase because revenue went down so much because they were trying to affect this change in the global monetary order. So I think Bessent absolutely cares where the S&P is, absolutely cares where the 10-year treasury is, because it affects his revenue and his ability to sell bonds.
And let me ask you one more point. Recession. This word recession has been used many, many times. And we're starting to see a lot of posts around, the predictions around the recession. I saw that the Atlanta Fed has been revising a minus 3.7% GDP growth in Q1, which means that effectively the swing would have been like 8% between the last quarter and this quarter. Like, do you see a recession, and does it even matter if there's a recession at this point?
I mean, I don't really care. It doesn't matter. It's sort of an economic, what do you include in there? Is it, if people are front loading imports, do you include that as a negative factor in the GDP, or do you ignore that and say, oh no, that's just because they were afraid of tariffs, so therefore we can adjust it higher and it's actually not a recession? I don't know, but this gives the Fed excuse to cut. That's what we care about. If there's this media frenzy about recession, then Powell can stand up there at the podium at the next press conference and say, oh, I'm afraid of a recession, therefore I preemptively have cut rates and stopped QT, started QE, all these different things. So we actually want a recession to be thought as imminent. Whether or not it happens or not, I don't know. But from a crypto perspective, where we only care about the amount of fiat liquidity in the system, we want the monetary people in charge to be afraid of it, therefore, or not even afraid of it, to use it as a justification to ease conditions, which they went on to do anyways.
So on a personal note, how are you now deploying capital? Are you accelerating your deployment of capital? Are you decelerating your deployment of capital? Are you just continuing on the same trajectory as you guys have been for the last couple of months? What is your strategy now in terms of capital expenditure?
So we accelerated a bit after the press conference, recent Fed press conference, where Powell announced the reduction of QT and sort of teased QE. We've accelerated a bit. If the market continues to collapse a bit, we'll probably accelerate even more in terms of deploying capital. Most of what we're buying is Bitcoin. I think Bitcoin dominance, that is the percentage of Bitcoin in the whole cryptocurrency market, continues to rise. And then at some point, let's say Bitcoin's 110, 120,000 or some level, then altcoins will start to get the fire, and then we'll rotate out of that and into some things that we really like.
Okay, so right now it's very much a Bitcoin market. The Bitcoin dominance does look, it more and more looks like it's going to get to that 70% level, which it was last time before the whole thing crashed. And I must say, I never thought that we'd see that again, but it looks like it's more and more happening. What's your thesis on things like Solana, Ethereum? Like, are you still bullish, not bullish at all?
I mean, I would say a whole lot of Ethereum. I think at some point the Ethereum hate is going to change. Like, obviously, usually the most hated asset is the best performing asset in the next cycle, and the most loved is the worst performing. Just mean reversion doesn't necessarily mean that one is better than the other. But if I had to deploy a fresh, dollar of capital today, I'd buy ETH rather than Solana, just because ETH's more hated than Solana. And the meme coin fad, I think, is going to be done for a while. Not to say it's going away. Obviously, I think meme coins are going to be here to stay for a very long time, but a lot of retail people lost a lot of money, and they're not going to be, slinging stuff on Pumped Out Fun and creating transaction fees for Solana as much as they used to. So I think that narrative around Solana being the meme coin L1, that's going to hurt its ability to, really outpace other L1s in this cycle.
I want to agree with you, but I also know that you get 2 green candles, and we get so fucking back. And then people start to launch meme coins again, and then the whole party starts again. I think the one thing I've realized in crypto is that people have really short memories, and that, I think if we have one green candle, one monthly green candle, it takes us to 100, 105 again, and the whole party starts again.
I'm not saying the party's not going to start again, but it might not be to the same level. Like, look at NFT trading. NFT trading was bananas in 2021, right? We've surpassed that all-time high in 2021. Are people slinging NFTs like they were back in 2021?
Definitely
no.
not.
I mean, not the same. There's some blue chips that are still retained value and whatnot, but it's not the same sort of frenzy. Will there be meme coins that do very, very well in the next leg up? Absolutely. But will there be sort of the plethora of, everyone trying to take a $1 million meme coin to $100 million market cap? I think that sort of game is going to rotate to something else.
Amazing. Arthur, listen, thank you so much. I think it's been an amazing week to get you on. I mean, one of the biggest weeks of the year, specifically the Liberation Day week, which is one of the biggest things. I really appreciate you being here. And giving us this clarity. So thank you, and much love from the Banter fam, my friend.
Thanks for having me.
Thank you, brother. And to you guys, I'll see you guys again on Monday. That's a great show. And I mean, to have Arthur with us so soon after the Trump Liberation Day, I think is a great honor. So again, if you enjoyed this video, obliterate the like button. I'll see you guys again on Monday. Until then, trade well, my friends.